Oh, dear. No? What are you doing?
Mate, so I was looking at my phone.
Oh,
Are we
are we
ready?
going to do the interview? Or?
Okay. Cal, was there a power cut while you were ironing your shirts this morning? Was there?
I think there was a little bit, actually. Wasn't now that you mentioned it? I did go to an effort to do that, but it's not up to my mother's standards, so I'm very disappointed.
Well, get on it. Well, today we are talking about the rotation into small cap stocks from the banking sector, I believe. So why don't you just give us a brief summary of what you're seeing for small caps going into 2025? You gave me a nice little summary off camera. So how about you repeat that for the viewers at home, and then we'll go into the questions.
Well, first of all, I've got to give a hat tip to Longwave Capital. They're a small cap fund manager that put out a really interesting report that I picked up on. And they found that the banking sector and the small cap sector in Australia are negatively correlated. So that means when the big banks outperform, the small caps usually lag, and the other way, when the big banks begin to struggle against the market, the small caps pick up. Now, that's really interesting right now because anybody watching this will know that CBA has gone to an extreme valuation. It's gone from 100 to 150. It's on 25 times earnings. Some say it's the most expensive bank in the world. Certainly, the dividend is gone to a very low percentage. Now, and we also know that some of the hedge funds and that are trying to short it. It's not working for them at the moment. Anyway, that said, it's very difficult to see the big banks outperforming again in 2025. They've had such a ripping run this year just because they don't have the earnings growth that you need to see for the share prices to keep pumping. So this sets the scene, alluding to the Longwave Capital thing, that the market will begin to sell out of the banks. And some people suggest it'll go into the resources. There's one potential rotation. But Trump war, China looking weak. I'm not 100% yet on that one. One sector where the market will go, well, I don't know if it will, can't be that definitive, but could go looking is in the small cap sector, which is still suppressed relative to where it was 3 or 4 years ago. And at the moment, it has flatlined a little bit, not all the stocks, but the small cap sector. So I expect next year a lot of capital to start hunting around in that sector. And in the last few weeks, we've seen multiple takeovers again. And so it's just indicative of the value that's down at the smaller end of the market.
Yeah. You highlight in your piece that the markets often present opportunities when things go from bad to less bad. What do you mean by that?
Well, again, and in the piece, I allude to the fact that everybody is concerned with the cost of living in Australia. It's hitting the mortgage belt. The fact of that, though, is well known to the market. So if you're being held back by the idea that Australia is going to go into recession or that it's a disaster out there, and I don't want to make it sound like there's no problems, but the market has, I believe, well and truly priced that in. And it's now looking to the growth sectors and the companies growing revenues. And so you can chase stocks with relatively confidence that you're not going to get burnt from the current state of Australia. Now, that's to say there are, of course, always risks, but don't be put off by because all we ever get is negative headlines about power prices, costs, all this type of thing, banning social media for under 16s or whatever it is, all these crazy, stupid policies. There are opportunities out there.
So obviously the small cap sector is quite broad. In a raging bull market, Greg made the point in the meeting the other week that it's when companies in that part of the bull market, when things get flying, a lot of the times it's the companies that don't have any earnings that get, the imagination takes over on where things would go. Are we at that phase yet, or are you still looking at companies that are actually showing a bit of proper revenue growth and profit first and foremost, or what are your thoughts on that?
No, we're definitely not in a very wild speculative market. There just isn't the volume. There isn't the heat. It's just not like it was in 2020, 2021 after the big collapse into March. It's nothing like that. So certainly in Australian Small Cap Investigator, which is the newsletter that I do, I'm looking mostly at cash-generating businesses.
Yeah.
With a few exceptions. I think you could probably make an exception now in the gold sector because the gold price is so strong. I'm happy to look at some of the developers and explorers and that type of thing. But generally speaking, we're not at that I don't think people have a sense yet of the next big wave of excitement in terms of an industry. Pre-COVID, we had cannabis, buy now, pay later, blockchain and crypto, then the electric car boom. So there were massive themes and narratives that people and investors and the market itself really got behind. We don't have that right now at the moment. So it's very much a case of each individual stock and its story rather than one thematic, perhaps with the exception of AI a little bit.
Yeah, it's weird, isn't it? Because right now, you do, if you objectively look at the markets, you do see a lot of things really going up. I mean, I know Bitcoin and crypto and that had a bit of a pullback overnight, but it's still just a tiny blip on where it's gone. Gold, obviously, is the gold sector pulled back slightly after Trump's administration election victory. Sorry, but if you objectively look at prices and stuff, it feels like some positives coming back, but yet you're still not getting that sense that people want to step in and take a risk, right?
Well, I mean, with Bitcoin, US stocks, gold, they're international markets. So again, the US market is pumping a lot harder than Australia. So there is lots of things intriguing about America, and they have these big growth industries and exciting industries. I allude to one in my issue going out today, in fact. That said, Australia is not quite in the same place. We're so dependent on mining. We really need it. And James Cooper, our colleague, is talking about how exciting that could get, but we're not quite there yet. So the super cycle, the idea of a commodity super cycle would be one of those big thematics that the Aussie market and Aussie investors can get really, really behind. Now, we know that the kind of the fuse is lit, if you like. All the conditions are there for prices to really scream, but someone's got to sort of light the match kind of thing. So it's definitely something to watch for in 2025, though.
So that was going to be my final question, actually. I know that you mentioned the potential combination of small cap rotation and James's commodity price thesis, on which he's quite bullish, even though we're yet to see the prices come through. But I think you're in agreement with him about the bullishness in commodity markets over the coming years. How would you suggest investors sort of balance exposure between those two potentially significant trends?
We'll start with gold is the first suggestion, because gold is already moving. So where some of the other commodities aren't, gold is already active and pressing up. The producers are making big cash flows, so that's real money there that you can count. Things get more complicated when you look at lithium, because those companies are in big distress, right? So they're not going to take off tomorrow. You'd have to be have high conviction and be prepared to wait a long time. But at the moment, those guys are cash flow negative. So it depends on what type of investor you are. But the first place to look is the more secure ones, if you like, that have either big cash flows or big markets. So, Greg is big on the coal stocks because they make a lot of money. And there's such a hostility to coal, or there was for the last 10 years, that
it creates value.
There's limited supply. So they're very unlikely to be knocked out like lithium was, where, just tons flooded the market and just collapsed the price on everybody. So you can look at little individual stories like that, but then mostly it's just a case of watching developments. So copper is the classic one. Everyone is primed for copper to go on a bull run. As soon as it does, the market and investors and traders will be all over it. But you're not necessarily going to see it coming. I can just, like last month, we saw some of the mid-tier gold producers just rip up. Just suddenly it was like someone flicked their fingers and they went up 30% in 5 sessions. So you sort of have to be either in or be watching very closely, because these things can turn on a dime.
Well, you'll certainly be watching closely, and I know coming into the Christmas period, all of you guys will be putting forward your thesis for 2025. Look forward to your one, Cal. Thanks for your time today. And if you're watching, do check out Callum's piece in Factel Daily today. The link's below, 100% free. Check it out. Cheers, buddy.
Cheers, Woods.
Thanks for tuning in to Factel Daily.
If you're ready to take a new approach to building wealth, avoiding the same old mainstream ideas and investigating new market trends, then make sure to hit the subscribe button and turn on post notifications so you don't miss a single video. And as a thank you, we've got a free report just for you. It is packed with actionable insights that show you how to capitalize on an alternative investment idea that you'll unlikely find anywhere else. You can download it right now by clicking on the link in the description below. So, if you're ready to discover strategies that the traditional market just doesn't offer, grab your free report. Until next time.